We strive to provide you with the best possible information to make informed decisions about your financial life. Introduction: the world of personal finance is vast and complex, with numerous products and services vying for our attention. Amidst the chaos, it's essential to have a reliable source of information to guide us through the process. That's where Geobanking Rates comes in, a trusted platform dedicated to providing unbiased reviews and ratings of financial products and services. The importance of unbiased reviews. Unbiased reviews are crucial in today's financial landscape. With so many products and services available, it's easy to get caught up in the hype and make uninformed decisions. Geobanking Rates' commitment to unbiased reviews ensures that you receive accurate and reliable information to make informed decisions about your financial life. Key benefits of unbiased reviews. Plus helps you make informed decisions, plus reduces the risk of financial mistakes, plus saves you time and money. How Geobanking Rates evaluates financial products. Geobanking Rates uses data-driven methodologies to evaluate financial products and services. This approach ensures that their reviews and ratings are based on objective criteria, rather than personal opinions or biases. This can be a significant burden for small business owners, especially those with limited financial resources. Understanding self-employment taxes. As a sole proprietor, you are considered self-employed and are required to pay self-employment taxes on your net earnings from self-employment. This tax is used to fund Social Security and Medicare, two of the largest government programs in the United States. This means that the S corporation's profits are distributed to the shareholders as dividends, which are then taxed at the individual level. This avoids the double taxation that occurs when a C corporation's profits are taxed at the corporate level and then again at the shareholder level. The benefits of choosing an S corporation. Why S corporations are ideal for entrepreneurs. As an entrepreneur, choosing the right business structure is crucial for the success and growth of your company. One popular option is the S corporation, which offers several benefits that make it an attractive choice for many business owners. In this article, we will explore the advantages of choosing an S corporation and why it is an ideal choice for entrepreneurs. Tax benefits. One of the primary benefits of choosing an S corporation is the tax benefits it offers. Unlike C corporations, S corporations are not subject to double taxation. Profits are taxed at the shareholder level, not the corporate level. Avoid double taxation. By distributing profits as dividends, S corporations avoid the double taxation that occurs when C corporations' profits are taxed at the corporate level and then again at the shareholder level. If you are self-employed, you may be able to deduct business expenses, such as equipment, supplies, and travel expenses. If you are married, you may be able to deduct your spouse's business expenses as well. Tax benefits for self-employed individuals. As a self-employed individual, you have the opportunity to take advantage of various tax benefits that can help reduce your tax liability. One of the most significant benefits is the ability to deduct business expenses on your tax return. Business expenses: equipment purchases, such as computers, printers, and software; office supplies, such as paper, pens, and toner; travel expenses, including transportation, lodging, and meals; professional fees, such as accounting and legal services; advertising and marketing expenses; home office deduction. If you work from home, you may be eligible for the home office deduction. This deduction allows you to deduct a portion of your rent or mortgage interest, property taxes, and utilities as business expenses. Calculate the square footage of your home office. Determine the percentage of your home that is used for business. Calculate the business use percentage of your rent or mortgage interest. Property taxes and utilities. Self-employed spouse: if you are married and self-employed, you may be able to deduct your spouse's business expenses as well. However, the FDII deduction is not without its challenges and complexities. Understanding the FDII deduction. The Foreign Derived Intangible Income (FDII) deduction is a tax provision introduced by the Tax Cuts and Jobs Act (TCJA) in 2017. It aims to encourage American businesses to invest in foreign markets and create jobs. The deduction applies to most items made outside the U.S., including intellectual property (IP), such as patents, copyrights, and trademarks; software and data research and development (R&D), Expenses. Certain types of licensing agreements. Benefits of the FDII deduction. The FDII deduction offers several benefits to American businesses, including reduced tax rates. The deduction reduces the tax rate by 1/3 on sales of most items made outside the U.S. Increased competitiveness. By reducing the tax rate on foreign-sourced income, the FDII deduction makes it more competitive for American businesses to invest in foreign markets. Job creation. The deduction aims to encourage businesses to create jobs in the U.S. and abroad. ## challenges and complexities. Challenges and complexities. While the FDII deduction offers several benefits, it also comes with challenges and complexities. Some of the key challenges include complexity of the deduction. The FDII deduction is a complex provision that requires careful planning and execution. Limited applicability. The deduction only applies to certain types of income, such as IP and R&D expenses. The Tax Cuts and Jobs Act, TCJA, was signed into law in 2017 by President Donald Trump. The law made significant changes to the U.S. tax code, including reducing corporate tax rates and increasing the standard deduction. Understanding the Tax Cuts and Jobs Act. The Tax Cuts and Jobs Act, TCJA, was a comprehensive overhaul of the U.S. tax code, aimed at stimulating economic growth and job creation. The law was signed into effect on December 22, 2017, and its provisions began to take effect on January 1, 2018. The TCJA made several key changes to the tax code, including reducing corporate tax rates from 35% to 21%, increasing the standard deduction for individuals and families, limiting the state and local tax (SALT) deduction to $10,000, doubling the child tax credit, repealing the individual mandate penalty. Impact on individuals and businesses. The TCJA had a significant impact on individuals and businesses, particularly those in the lower and middle income brackets. The law's provisions, such as the increased standard deduction and the child tax credit, provided relief to many taxpayers. However, the law's limitations on the SALT deduction and the repeal of the individual mandate penalty had a more limited impact. For individuals, the TCJA provided a significant boost to their take-home pay, as the increased standard deduction and the child tax credit reduced their tax liability.